Hello, everybody. Welcome. Let's get started right away. Please let me know how the audio quality is on X and on YouTube. All good? How's the audio quality? Test, test, one, two, three. Test, test, one, two, three. Uh, X looks good, but YouTube, I'm not sure. Hold on one second. Testing, testing. Looks YouTube looks good too. Okay. Um, all right. We're going to continue. Yeah, this is really sad. Um, I don't know. Yeah, this is really sad. Um, I don't know with X, but let's continue. US retail investors are growing, increasingly uneasy about a plummet in the stock market, asking for investment advice, questioning whether to buy the dip and looking for safer havens. Strategists and wealth advisors said investors fear that Donald Trump's tariffs will spark an economic downturn are driving a sell-off in equities, wiping out $4 trillion from the S&P 500's peak last month. A stunning reversal for Wall Street that was once fired up by President's agenda. That was feeding through to some individual investor behavior. We're seeing less and less dip buying. Hold on one second. Uh, I think YouTube is fine. We're seeing less and less dip buying than we've seen in a while, which tells us people are stepping back a little bit. Said Joe Mazzola, head trading and derivative strategies and Charles Schwab. Less and less dip buying than we've seen in a while. Yeah, that's an important quote. So let's tweet that out. We're seeing less and less dip buying recently while which tells people step back a little bit. Head trading and Charles Schwab. Okay, let's continue. The firm began seeing creeping risk aversion among retail investment clients in mid-February, he said, as those with larger portfolios became net sellers. Andrew Graham, managing partner of Jackson Square Capital, which manages money for affluent and high net worth individuals and families, said he's been building up cash in his client accounts to the highest in about 5 years when the pandemic emerged as a new threat to the economy. Well, that would have been too soon. Graham, who has discretion over managing his clients' accounts, said cash is now well over 10% of most of his clients' portfolios. He is still selling stocks and building cash for his clients. Clients are now being sure to show up for scheduled quarterly portfolio reviews with Graham and his team, he said. Worried or nervous clients translate into busier calendar for us than usual, Graham said. What concerns him, however, is that many investors may still view the sell off as a correction as opposed to a prolonged downturn. Yeah, yeah, that's exactly right. A lot of people are looking at this as a temporary, transitory thing. But I think the issue is more longer term than what most people believe. Broadly, cash levels are high with assets with money market funds at a record, according to data from Investment Company Institute. Cash levels marched steadily higher last week, setting a fresh record of $7.3 trillion, said Peter Crane of Crane Data, a firm that tracks market flows. That compares with about 7.17 trillion at the beginning of 2025. To be sure, not all retail investors are overly worried. According to data from Vanda Research as of last week, the last period for which figures were available, retail investors remain net buyers of single stocks that have been market darlings, such as Palantir. Uh, so that group probably includes Tesla as well. So let's add that to the tweet that we just posted. Crazy. So crazy. So crazy. All right, let's continue. Even leveraged exchange traded funds offering investors a multiple of any upside on underlying stocks or indices have been popular. said Marco Lacini, Senior VP at Vonda. Rotation or route? As wealth advisors steer clients away from the most overvalued corner of the market, the stocks have also had an outsized weight in the S&P 500 index. They are drawing comfort from signs that not all parts of the market participate in Monday's rout to the same extent. It feels to me that there's a rotation underway, said Schwaz Mazzola, pointing to the fact that while investors are dumping technology and financial stocks, energy and utility companies attracting new inflows. He also draws comfort from the advanced decline ratio. Interesting. Nate Garrison, chief investment officer at World Investment Advisors, said he had been reallocating client assets into value stocks since early this year. These are lower risk securities that offer stable, if not spectacular growth, but also tend to trade at lower valuation than flashier, high octane stocks like Nvidia. He has also added to positions in emerging markets and international equities. Value is still up this year, even as growth stocks are taking it on the chin. That still does not mean Garrison is willing to urge his clients to buy the dip. This is getting rid of the froth, Garrison said. We're urging caution when it comes to, hold on. We're urging caution when it comes to making any major allocation decisions. There are real risks. This article has no new information, except for those two quotes, I guess. Less dip buying than we've seen in a while, but retail investors remain net buyers of single stocks that have been market darlings, including leveraged ETFs. Yeah. Okay, so that's not that much of a different than a few weeks ago. Very interesting. Tesla's up 3% today. Um, Trump recommended his followers buy Teslas. Interesting move. Any questions, comments? Please request to speak. Otherwise, we're gonna keep this space short. Any questions, comments? Please request to speak. Let's look at a couple of stocks here. Apple is making a big move. Let's look at that real quick. Actually, let's start with Oracle because they announced earnings. Let's see what they said. Oracle was up as much as $200 in early December, and now it's about 144. Elon Musk leads billionaire losses stemming from tech sell-off. Okay. Shares plunge as Q3 earnings miss, despite $130 billion of cloud orders. Let me see. Oracle's AI boom is coming. It's just not there yet, according to Wall Street Journal. Oracle reports lackluster results, damping cloud enthusiasm. Let's read that one. Fiscal third quarter sales increased 6% to 14 billion. The company said Monday in a statement. Analysts on average projected 14.4 billion, according to data compiled by Bloomberg. Revenue miss. That's huge. That's a big miss. Revenue from Oracle's cloud infrastructure also missed estimates. The company's stock fell as much as 7.5% after markets opened in New York on Tuesday, touching their lowest level since August 2024. Still, Oracle trumpeted a surge in bookings and said its growing cloud infrastructure business will boost revenue over the next 2 fiscal years. Remaining performance obligations, a measure of bookings, were 130 billion in the period ended February 28, compared to 97 billion in the previous quarter. Interesting. The company projected sales will increase 15% in the fiscal year beginning June, 20% in fiscal year 2027. Analysts on average estimate increase of 13 to 14%. Okay. So company forecast for the next 2 years is actually higher than analyst estimates. A large increase in bookings. So why is this stock down? Because this quarter they missed quite a bit. Much of the future sales bump was attributed to Oracle's growing cloud infrastructure business, which has been fueled by demand for computing power to run AI workloads. company's strategy to become a major player in the competitive industry of renting out computing power and storage was invalidated in January when it announced a joint venture with OpenAI and SoftBank on a $100 billion project to build data centers for the AI startup. They're kind of late to the game, I guess. We have now signed cloud agreements with several world-leading technology companies, including OpenAI, XI, Meta, NVIDIA, and AMD, said the CEO. While the campus for the joint venture is taking shape in Texas, Katz said Oracle's $130 billion in remaining performance obligations didn't include any business from the project, dubbed Stargate. Bookings will continue to grow rapidly as we look forward to signing our first Stargate contracts, she said. Investors are closely tracking data center spending across the industry for any signs of pullback. Chinese upstart DeepSeek released a new open source AI model that it claims rivals the abilities of US technology at a fraction of the cost, which triggered concerns that companies are investing too much on building data centers. Okay, so that's Oracle. Any questions, comments, please request to speak or leave a chat on YouTube. Let's look at Apple. Oh, you know what I want to talk about? I want to talk about these tariff wars. There's some new developments on that front. It was quiet for a few days, and now Trump's seeing equity markets kind of struggling to come up a little bit, slams another round. And this one's actually pretty concerning, in my opinion. And here's why. S&P 500 Dow declined after Trump's fresh tariffs on Canada. The Dow and the benchmark S&P 500 fell in choppy trading on Tuesday after President Trump announced fresh tariffs on Canada, adding to investor unease that his trade policies could trigger an economic slowdown. Trump doubled his planned tariffs on all imports of steel and aluminum products from Canada to 50%. That is insane. I mean, these are steel and aluminum going to cars. And it's not like, you know, let's say company A imports steel aluminum from Canada, but company B doesn't. Company B is still impacted from these tariffs because um, everybody in all steel manufacturers in the US will increase their prices um, because competition basically essentially increased price by 50%. So it's not going to be instant, but over time, all the equilibrium will be reached again, and all companies will be impacted. It's not just the ones importing from Canada. You know what I want to look at after this news? I want to look at CME Fed Watch. Let's see if there's a change in the expected interest rate. There's in about 8 days, FOMC will meet. Uh, they're most likely going to 97% probability they won't change rates next week. And in May, there's now a 60% probability of a pause in May as well. And in June, the first cut is expected in June. Okay. And then by December, markets expect 3 cuts going on to 4 cuts. And if these tariff wars continue to escalate, that's just not going to happen. I mean, that's, full stop. It's just not going to happen. Okay, let's continue here. Trump doubled his planned tariffs on all imports of steel and aluminum from Canada on 50% in response to the province of Ontario's decision to place a 25% tariff on its electricity exports to the US. So that's pretty crazy, right? So I think that's kind of Northeast electricity. And that's my knowledge. Don't quote me on that. Actually, you know what? Let's just ask ChatGPT right now. Which states import electricity from Ontario? Several US states import electricity from Ontario, primarily through interconnections managed by the Independent Electricity System Operator and neighboring US grid operators like Mid-Continent Independent System Operator and PJM interconnection. The main states and import electricity from Ontario include 1, New York, 2, Michigan, 3, Minnesota, 4, Ohio, 5, Pennsylvania. So it's not just Northeast. Interesting. These interconnections allow Ontario to export surplus electricity, particularly from hydro and nuclear, to meet US demand, where it's economically viable. Mhm. So, any companies who are manufacturing in those 5 states is going to see their costs increase. Electricity goes into everything. So, and consumers will see a jump as well in their spending there. Yeah, that's interesting. And I mean, not only that, the guy also said today that here we go. Um, Trump also threatened substantially increased tariffs on cars coming into the US on April 2. Ford and GM that have vast supply chains across North America fell around 3% each. Global markets have been roiled ever since Trump sparked back and forth tariffs against major trading partners such as Canada, Mexico, and China. Analysts have been warned escalating trade tensions could fan inflation pressures and potentially stall economic growth. I mean, I don't think that's the extent of it. I think this could lead to a World War III. Low probability at this point, but the path is definitely there. Like if Ontario shuts down electricity to New York, you bet your ass US is going to go in there. On Monday, S&P 500 recorded its most significant one-day drop since December 18, wiping out a staggering $4 trillion from its recent peak. Meanwhile, tech-heavy Nasdaq confirmed a 10% correction late last week. Wait, so we saw a $4 trillion disappear just yesterday? I didn't realize that was the case. That's crazy. That's wild. Okay. Every time we feel like we're getting a little bit of a lift, we get a Trump update on more tariffs, said Dennis Dick, a trader at Triple D. International investors looking at all the political uncertainty in the North American markets are saying, let's invest elsewhere. We have some requests to speak. I'll get back to in a second. Tariff uncertainty has also weighed on consumer sentiment, with company executives increasingly flagging the impact it can have on upcoming earnings. Polls forecast a bigger than expected drop in annual comparable sales, sending the retail shares down 23%. Dick's Sporting Goods declined 6% after retail forecast downbeat annual results. Delta still is 7% after the carrier slashed its first quarter profit estimates by half. That is wild. That's wild because oil prices are dropping. That's crazy. American Airlines also dropped 5% after the carrier forecast a bigger than expected first quarter loss, sending the broader Dow Jones Transportation Index down by 2.5%. Tariff uncertainty is creating a degree of paralysis across the system, said David Russell, global head of market strategy at TradeStation. Maybe that's the goal. Maybe that's Trump's goal. Cause some fog. Who knows? Trump will meet the CEOs of America's biggest companies later in the day. Meanwhile, a U.S. Labor Department report showed job openings increased in January. That's January data, though, so it's very dated. A closer watch inflation report is expected later in the week. Interest rate futures point to U.S. Fed leaving borrowing costs unchanged at its meeting next week. But traders are increasingly pricing more interest rate cuts in the second half of the year on expectations of slowing growth. That's not enough. Aiding gains on the Nasdaq, mega caps such as Nvidia rose 3%. Amazon added 2, while Tesla added nearly 5 after the stock fell 15% in the previous session. Oracle dropped 4% after the cloud company missed quarterly revenue estimates. Citi became the latest brokerage to revise its stance on US stocks, downgrading its recommendation to neutral, declining issues, blah, blah, blah. We did all that. Okay, let's go to this person requesting to speak. Tamaki, you may unmute yourself and go ahead. Tamaki, you have to unmute yourself.
Yeah, hi, thank you. I was wondering if we can play a hypothetical game here. If you take the robo taxi out of Tesla, can we talk about, let's say, just forget about robo taxi? How much room do you think Tesla has of expansion?
0. Is that it?
Yeah, that was So we're just talking about Tesla equivalent to robotaxi, right?
Do you have a question? You asked one question, I answered. The second question must be 10 words or fewer, otherwise I'm going to move it to listener.
All right, okay.
Thank you. All right. Let's see what else is new. Yeah, these job openings. 1 second. Okay. Let's see, what else? What else? What else? What else? Yields are up 3, 4, 5 basis points. 4% 5-year yield, 4.25% 10-year yield. Oil prices are up $66.50. Yeah, the news of the day is this next level of trade tensions, trade wars. I mean, this is going into trade wars. And if Canada, Ontario specifically, cuts electricity in New York, I think the US would go into Canada militarily. So that's a major risk that is not priced in any stock market right now, anywhere around the world, and in any asset class whatsoever. Lucia, how are you?
Hey, what's up, Yaman? All good, thank you.
Good. I don't really have anything else to say, honestly.
Yeah, Yaman, I had a question.
Yeah.
Do you subscribe to the idea that Trump wants to crash the market and lower the rates? Or do you think he's just uninjured?
Sorry, I'm checking something right now. Can you say that again, please?
Yeah. Do you think Trump wants to crash the market to lower the rates and refinance the debt at a lower price? Or he's just uninjured?
Yeah, I don't think it's a purposeful crash. I think they're doing something that they feel necessary, which is cutting, government spending, and then they're willing to take the collateral damage. But I don't think crashing the markets or yields is like a direct goal here. Canada files to sell US dollar bonds, size undisclosed. Let's see how much Canada owns. How much treasuries does Canada own? On June 20, 2024, Canada held approximately $541 billion of U.S. Treasury securities. This positions Canada among the top foreign holders of U.S. Treasury debt. In the broader context of foreign investments, Canadian investors have been actively acquiring U.S. securities. From 2020 to 2024, they invested a total of $243 billion in U.S. securities, with $51 billion directly specifically toward U.S. Treasury bonds. Yeah, so if the government, the Canadian government, and the individuals, high net worth individual or asset managers start dumping U.S. securities, that could have a material impact. Lucia?
I just wanted to give out some input of what is happening in Europe. So I think at least for 4 years, for as long Trump is going to be in power, I think there is going to be a material shift from European and Europe and the rest of the world, and getting closer, getting away from the USA, getting closer to China. There is no question why China stocks are doing well right now. I think the world is better off with China than the USA with Trump. I think at least this is what I think politicians think and what I think honestly. And if you look even at my parents, which are boomers, okay, and they are trying effectively to boycott the USA. For example, they unsubscribed from Netflix, and Netflix was like their brainwashing machine. Okay, every night they would watch Netflix for hours, and so this is the popular. That this is what it's happening. I'm not really very bullish on the USA from now to the future.
Okay. Thank you. Anything else? Any other questions, comments, grudges? Let's look at some Tesla stuff. Actually, there's one news here. Meta Platforms are initiating testing of its first in-house AI training chip developed in partnership with TSMC as part of a strategy to lessen its reliance on NVIDIA for AI computing resources. This move is aimed at reducing costs and optimizing AI performance. The chip from MTIA series is tailored for AI tasks, potentially offering efficiency advantages over conventional GPUs. If the testing phase proves successful, Meta intends to expand the use of these chips, which could impact NVIDIA's market position and influence the future direction of AI technology development. Yeah, I mean, so we have Amazon doing its own chips. Google has its own TPUs. Tesla has a Dojo, although we don't know where that's going. Meta is now doing its own. Microsoft is doing its own as well. So all the major customers of NVIDIA are bringing this in-house. So that is a huge dent in any sort of growth and margin forecasts for NVIDIA in the future. So if you have any NVIDIA shares, I would sell the RIPs. Same with Tesla. If you have Tesla shares, I would sell the RIPs. I mean, look at this. The president of the United States with 100 million plus followers goes on and says, buy Teslas. And the stock is up 1%. Elon, the world's richest man with hundreds of millions of followers, continue to, push the new Model Y. Nothing. There's not even a dead cat bounce after yesterday's 15% drop. So I think that really says everything you need to know about where this stock is headed. Luce?
Something that I find extremely funny is that many of the people that used to cherish Trump and cherish his administration haven't changed their idea even after Trump is making a mess. And this is crazy to me. It's like a cult even bigger
Yeah.
than Tesla.
Yeah. Yeah, I think this tariff war stuff is gonna get worse before it gets better. Okay, let me just look at a couple of things. Today, China announced weekly insurance numbers, which was lower than expected. I think one thing that's really going to disappoint people is Model Y demand. The new Model Y demand, I think, is going to be way lower than people realize. Think. So that's where the biggest disagreement right now between bulls and bears. Near term, biggest disagreement right now is where the Model Y demand is going to be in the coming months. I watched Rob Barron's interview today, and no disrespect, but I think he's not on my list of people I listen to anymore. One of the quotes he says Ron Baron, Elon Musk's time at his companies, he's showing up. I was talking with someone who's financial executive at SpaceX last week. She was telling me that when there's an issue with something like Starship, there might be 3 meetings a week. He's in every one of the meetings. He's there for Falcon 9 meetings. He's there for Starlink meetings, but he's there all the time. He's more charged up about his business now than he's ever been. Interesting. He says, when you're talking about Europe sales being down 40, 50%, that's because they don't have any cars. They're not making them because they're going from the Model Y, which is the best selling car on the planet, to not making them. So how are you going to have up sales when the car that's driving your business isn't being made? They're starting to make them now with the refresh model. That is good. This is a great, incredible car. Yeah, see, that's what I'm saying. I think this is what every bull, every Tesla investor believes today. But I think they're going to be really proven wrong in a major, major way. And I think we have all the data to reach that conclusion today, but people are ignoring it. Bulls are ignoring the data and the facts. I'm confident that just like last year was a down year from previous year, 2025 is going to be a down year from 2024, and even maybe 2026 is going to be a down year from 2025. So that's 3 years in a row of negative growth and 4 years of zero or negative growth. So that is massive for a company that's priced at these levels. And robotaxis aren't coming. Optimus is 10 years away. Energy has its own problems. There's a lot of competition from China. It has a lot of backlog in US. Europe is not going to take it. Canada is not going to take it. So there's no growth there either, any material growth, really. Maybe it'll add a couple $1 billion to the bottom line annual. But when you're priced like 100x PE, then you need more than a couple $1 billion. So I don't see how the stock doesn't drop to $100 or maybe even lower, honestly, in the coming months. Luce?
Yeah, man, can you refresh my memory? What happened when Model 3 Refresh was released? Did it increase the
No, it
sale?
didn't. It didn't
Yeah.
increase sales. Yeah.
Yeah,
I
exactly.
mean, SU7 from China, Xiaomi SU7 is a better car in every way than the Model 3, and is selling for 10% cheaper. So 10% more range for 10% cheaper. Has a head-up display that many Tesla owners always wanted. Even in Model S and X, Tesla doesn't do that. And on top of that, it's got ultrasonic sensors that some people are sticklers about. It's got the stalk that some people are stickler about. I mean, I don't agree with those things, but it doesn't matter what I think. What matters is what the consumer thinks, and the consumer want those things. And you can have this longer term view of like in the future there's going to be robotaxis, so who cares about those things, etc. And you cut your costs a little bit in the near term. That's fine, but you're going to have some people shifting to other brands because of those things if you don't offer it. So there's always repercussions to every decision here. So that's that. Tesla stock is now at plus 1.4%. I wouldn't be surprised if it closes negative, honestly. And I think we have more days like yesterday ahead for Tesla stock. All right, let's see what else. Four Tesla supercharger adapters are now on sale for $200. Okay. Uh, couple of Starlink news. So last week, so Sawyer says last week's 13,800 new Teslas were insured in China last week. Last week was the second week that included new Model Y deliveries. Yeah. I mean, I think this is going to appear in China first. Like the disappointing demand for the new Model Y is going to appear in China first. And I really don't see how the new weekly insured Model Ys. Let's see here. Let's make a prediction. So the highest weekly amount I see in 2024, this is total insured units, is 16,200, 22,600 on week 39. Yeah. So on average, yeah. I mean, I just don't see how China is going to show any material growth over last year, even with the new Model Y and the second year for the new Model 3. I think this YU7 from Xiaomi is going to stop the growth of Model Y in its tracks. And they're not the only one, by the way. There's a lot of Chinese companies coming out with newer, better, cheaper SUVs. So Fox News, Sean Hannity bought a Tesla Model S Plaid. Trump is telling people to buy Teslas. Going to be interesting to see how that impacts delivery estimates. I don't really expect much of an increase in Q1 or any material impact in Q1. But anything is possible. Anything is possible. But the fact is, Tesla's problems are global. They're not just US. Like Canada bought about 60,000 Teslas last year. And I struggle to see why any Canadian would buy any Teslas this year after all this, which seems to be getting worse. The issue in Canada, between Canada and US, seems to be getting worse. And it's at a point where Canadians are considering cutting off electricity to New York. That's wild. That's wild. That would shoot up electricity prices in those 5 states that buy electricity from Canada. That's really crazy. Let's see what else. Morgan Stanley's Adam Jones thinks 50% pullback in Tesla is a buying opportunity for an embodied AI compounder. Okay. Having covered Tesla for nearly 15 years, we find the investor narrative around the company tends to follow the share price, blah, blah, blah. Are you speaking for yourself? Elon Musk today, when asked how he juggles Doge and his companies, etc. Cybertruck tow hitch tongue weight is rated for just 1,100 pounds, but held over 10,000 pounds. Okay. Apple is planning one of the biggest software overhauls in its history for iOS 19, iPadOS 19, and macOS 16 later this year. The changes go well beyond the new code of paint like iOS 7. This is a fundamental revamp. Okay. Okay. I didn't watch the interview. Lucha, did you watch? He's off. If anyone watched the interview between Elon and Larry Kudlow, you're welcome to come up. Okay, and then let's look at one more thing here. United Airlines said it has seen 50% drop in government-related travel, according to Bloomberg. That's crazy. That's so wild. I think people who said real estate prices in DC aren't getting impacted were a little too early to reach judgment here. A parent on Reddit is asking for legal advice after the 18-year-old daughter was caught on camera vandalizing a Tesla and Cybertruck during the protest and is now being prosecuted. Are they going to make an example out of a few people? Maybe that will end things. Who knows? But that doesn't change the fact that a lot of people, I mean, I estimate in the US alone, tens of millions of people. And when you combine Europe, Canada, all liberal states in US, and other parts of the rest of the world, we're talking hundreds of millions of people I don't think we'll ever buy a Tesla because of the last couple of years of political activism. I mean, there was a post on Threads, that talked about Uber, asking Uber to create a button to get a car that is not a Tesla. And when you consider the fact that most rideshare demand is in center cities, and center cities, even in Texas, like Austin, is a liberal city. So most demand, robotaxi demand, is going to be in from liberals. You're going to have a really difficult time turning this around, I think. Here's a tweet at the top of our screens. Uber, we need a no Tesla button ASAP. Canceled 6 rides today and went with Lyft because they were all Teslas. So this should be a wake-up call for Tesla investors. But of course, it's not going to be. It's not going to be. All right. I want to check one more thing here. Give me 1 sec. This is more for Tesla news. I mean, I posted this tweet just now on YouTube as well, or the thread is, you can see this on your screens as well. We need a no Tesla button ASAP. Cancel 6 rides today and went with Lyft because they were all Teslas. Now look at the number of likes. This was yesterday when I posted this at 6 a.m. So probably more now. But 13,000 plus likes. Millions of views for this thing. 15,000 likes. And if I check it now, it's probably 20,000 something. And this is not just one person. I guarantee you, in any major city in the US, pick up any major city in the US, like top 20 city, top 20 populous city, majority of people agree with this statement. Because city centers where rideshare demand is going to be, city centers where most rideshare demand, I mean, most of it, like overwhelming majority of rideshare demand is in center cities. People are liberal. Even in Texas, Austin is liberal. I mean, it's not like Philadelphia liberal, but it's still liberal. And you have to go out like 5-10 miles outside the city to find the Republicans. So, yeah, this is way worse than people realize. All right, let's look at something here. Give me 1 sec. Nissan promotes product guide to CEO. Expand investing billions in humanoid robots. There you go. More Chinese companies building humanoid robots, and they have the money. They have billions of dollars. Don't worry about the money. Tesla stuck down most in 4 years. McLaren merger expected soon. First German union still worried about bankruptcy. Fords. Bridgestone measures environmental impact of tires. BMW about to launch a new zonal architecture. VW for that's the other thing. So zonal architecture, electric architecture. Tesla started obviously, but Rivian duplicated. Now BMW is doing it. Chinese like BYD has suspension systems on mass market vehicles now that bests Teslas. So companies are copying each other. So innovation isn't just coming from Tesla anymore because Elon is not there. Elon's working from home. So, all right. As long as Elon continues to work from home, Tesla is not going to be innovation leader. All right. Any other questions, comments? Otherwise, we're going to end the space. Going once, going twice, going 2.5 times. And let's call it a day. Thank you very much, everybody. We have a couple of comments on YouTube. In my opinion, Donald Trump is a henchman, including Elon. You have no idea what they're doing, blah, blah, blah. In my opinion, it's kind of crazy that people don't like the world's richest man on earth and the US president twice now think that they don't know what they're doing. Like, you got to be crazy to think that, I think. You have to be really anyway. All right. Thank you very much. I'll chat with you all next time. Take care.